welcome back to my channel. Don't forget like, comment, share, and subscribe. Hawkish Fed comments and Bitcoin derivatives that point to further Bitcoin downside. Bitcoin and stock sold off after comments from the Federal Reserve reemphasized the Fed's commitment to lowering high inflation in the United States. 700 pump on August 26 took Bitcoin from $21 120 to 21 $870 less than 2 hours. However, the movement was completely erased after comments from U.S. Federal Reserve Chair reiterated the bank's commitment to contain inflation by thinning the economy following Powell's speech. Bit price dropped as low 2070. At Jackson Hole, Powell specifically mentioned that the historical record cautioned strongly against prematurely loosening policy. Righty. After those remarks, the U.S. stocks market indexes reacted negatively with the S&P 500 dropping 2.2% within the hour. On the Bitcoin chart, the available bird candle, a reference to the shape of Bart Simpson head and a descriptor of Bitcoin up and down price action, surfaced outside of these unpredictable technical analysis indicators. There are other indicators that point to Bitcoin broader neutral to bearish sentiment. Regulators up the pace on crypto legislation. New flows for cryptocurrencies has been negative for quite some time, and this is also weighing on investor sentiment. On August 24, the U.S. Federal Deposit Insurance Corporation (FDIC) issued cease and desist letters to 5 companies for allegedly making false representations about deposit insurance related to cryptocurrencies, including FTX US. On August, India-based crypto exchange CoinSwitch had its premise searched by anti-money laundering against over alleged violations of forex laws launched in India in 2020. CoinSwitch successfully raised capital from Coinbase Venture under Shane Horowitz, Sokotia, and Tigger Global. Lastly, on August 26, the U.S. Securities and Exchange Commission postponed a decision for a Bitcoin spot exchange trade fund by global investment firm forex even though the upper odds were remote. It reinforced an anti-crypto sentiment from the regulator. It reinforced consequently, crypto investors are faced with lingering uncertainty despite a seemingly helpful inflationary scenario which should favor supply-heavy assets. For this reason, analyzing crypto derivatives is essential to understanding whether investors have been facing higher odds or downturn protests were neutral to bearish ahead of the dump. Retail traders usually avoid quarterly futures due to their price difference from spot market. Still, they are professional traders prefer instruments because they prevent the perpetual fluctuation of funding rates that often occurs in a contract. In healthy market, the indicator should trade at a 4% to 8% analyst premium to cover costs and associated risks. Yet that has not been the case because the Bitcoin future premium remained below 1.8% the entire time. This data reflects professional trends unwilling to add leveraged long ball positions. Like GMA, Bitcoin futures see record discount amid very bearish sentiment. One must also analyze the Bitcoin option markets to exclude externalities specific to the future instrument. For example, the 25% delta skew is a telling sign when market markers and albeit these are overchanging for upside or downside protection. Okay, maybe that's from me. Thanks for your attention. Don't forget like, comment, share, and subscribe. See you later, guys.